I am Sarah Terry. I am with the International Inbound Travel Association, and we thank you all for joining us for today's webinar, Understanding COVID-19 Legislation. And we are thrilled to have with us Chuni T. Wright and Laura Merritt. Chuni is an adventure travel law attorney who is here to discuss financial relief available under the Coronavirus Aid, Relief, and Economic Security, also known as the CARES Act, cancellation and refund strategies in the wake of COVID-19, and mitigating future business risks. Laura is a labor and employment attorney, and she will be providing an overview of best practices and key employment laws currently impacting the workforce, and this includes emergency sick leave, enhanced family and medical leave requirements, and the newly enacted Families First Coronavirus Response Act. Both Chuni and Laura will be presenting to us today, and so we have everyone on mute. Once they are done presenting, we will have an opportunity for question and answer, so please feel free to take yourself off mute at that time or utilize the chat feature. And I know some of you have sent in questions in advance, and so Chuni and Laura will also be addressing those during their presentation. So without further ado, I'd like to turn things over to Chuni. Thank you.
Thank you for that introduction, Sarah, and I'm delighted to be here today with Laura to hopefully impart some information that settle your nerves a bit. It's a really confusing, stressful time for everyone, and so thanks for hopping on today, and you know, we look forward to your questions. I did receive a number of questions with respect to my section in advance, so thank you. I can hear, you know, just all the questions out there with respect to the financial relief that you're hearing about on the news and from friends and just everywhere. It's a lot of information. Some of the questions that came in advance, and I'm reading here, questions like, how do small businesses know where to go? What loans assistance programs are most appropriate? How does one apply for financial help? What is this about $10,000 forgivable loan? So it sounds like it's a big ball of information, hard to digest, but I'm going to break it down and just give you a very high level view of what these programs are about. People are calling them different things, so it gets really confusing. But if you just think about them in the buckets that I'm going to be discussing, it just make it a lot easier. There are a lot of resources out there that talk about these loan programs and forgiveness, but they're really just a few key sites that you need to go to. You'll get all your information there, and then the rest will just be, you know, places you can go to read and just learn more about you know, views about these different loans. So I will first say that none of this information that I'm providing is geared towards a particular situation. I don't know your situations out there, but there should be enough information that as you listen to the points that I make, you'll be able to say, aha, you know, that sounds like something I might be interested in exploring. So with that, I'll just jump into the different categories of relief that are available and what's been going on the last few days. Everything has been a whirlwind because the federal government passed a law last Friday called the CARES Act to deal with coronavirus issues and basically to help our economy. So they did this in a rush fashion. It's a huge act. If you've taken a look at it, it addresses a lot of things. It's a lot to digest. They did that without ironing down a lot of the process details, because that was just gonna, you know, they needed to act quickly and they didn't want to get bogged down. We've seen how quickly Congress can act or not act. So what's happening is they passed an act, and now we have information and guidance that is coming out now. That's why you're hearing more things, new things each day. So the loans that are available consist of new loans and also old loans that have been around a long time through the Small Business Administration. What this new CARES Act did for the old loans that were in existence is that it made these loans a little easier to apply for because time is of the essence right now. Businesses are falling apart, people can't go anywhere. So they wanted to ease some of the restrictions that currently exist. So that's what the CARES Act did. The CARES Act also sort of earmarked a lot of money that has to go to businesses in need. It sounds like a lot of money. There's a lot of demand. So be forewarned that you must get in line early to apply for these things because, you know, even if you hear that a loan is so many hundreds of millions, there are a lot of people in line. And once they max out, the money won't be there. So even if you're sitting here digesting what's best for you, you may not even know if you want a loan, but if you even think that you might need any of these funds, go ahead and submit your application. Carve out a few hours and just sit and go through the materials. So the first is, you've probably heard about this Paycheck Program. This is a small business administration loan program. The section is 7A, so you might hear 7A loan or some, you know, the Paycheck Protection Program. It's all the same thing. And what it is, it's for businesses that are having cash flow problems and need 8 weeks of cash flow assistance to maintain their payroll. The government has authorized $349 billion for this, so that is earmarked. If you're a small business, there's certain nonprofit organizations, veterans organizations, and tribal businesses can apply. Also, individuals that are self-employed and independent contractors can also apply. It also includes sole proprietors. The hitch is you must have existed on February 15, 2020. That means you can't just have started up your business in March. You know, if you're a new, brand new business, you're kind of be out of luck for this. You have to have 500 or fewer employees. They can be both part-time and full-time. And what you can apply for is the lesser of 2.5 times the average monthly payroll cost. This includes your benefits for the prior 12 months from the date of your application, or $10 million. So most of you are going to fall into that first category, okay? Interest can't be greater than 4%, so it's at a favorable term for businesses. The other thing that's important is that you don't have to put up any collateral or put up a personal guarantee. That's huge. Loan payments are deferred for 6 months. And this is the part that a lot of people are asking about is for the loan being forgiven. Do you have to repay it? The answer is no, you don't have to repay either the full amount or part amount, depends on your situation, if you use the funds for specified purposes, payroll, utilities, mortgage interest, not the principal. And you have to maintain your current payroll for 8 weeks to get the full forgiveness. Or you rehire employees by June 30th. And Laura's going to get into the intricacies of that. What I've read from the Department of Treasury website is that because there's so much demand, they're going to be looking at full forgiveness for businesses that that put the money 75% towards payroll. Okay, so you can't have 75% going to mortgage interest and 25% to payroll. It's the higher bar. So how do you even apply for this? Well, the application period opens April 3rd for small businesses. It opens April 10th for independent contractors and self-employed individuals. It's a 2-page form, so it's very easily doable. It looks like it's this here. I would say go apply. If you think this is something you want, do it right away. On April 3rd. You can go to the website home.treasury.gov. Is the full URL is https://home.treasury.gov. At the top, you're going to see a link. It's not hard to find. It will say, for small businesses seeking direct relief from COVID-19, click here to learn more about Paycheck Protection loans. When you click there, it's going to take you to another page. 4th bullet down, you're going to see a link to the application for borrowers. That's the fourth link down again. So if you go there, you can print out a copy of the form, you can get your information ready, and then you can apply. Where do you apply? Well, you can apply through an existing Small Business Administration 7A lender, through any federally insured credit union, and through the farm credit system. Lenders are being approved each day, so there might be lenders that are not on the SBA list, but they're going to get approved. You can go to the small business website, the sba.gov, and see the list of lenders. I also highly recommend that you call your bank, because they'll be able to tell you if they're already a 7A lender. So that's really key. Okay, so I'm gonna keep moving on. We're taking questions at the end, so I won't be pausing for those. The next loan that people are asking about is this Economic Injury Disaster Loan Program. Now, this is an existing loan program with the Small Business Administration. It's been around to help people with hurricane relief, tornado relief, any disaster like that. In the weeks right after COVID, as this was building up, the government, the federal government, approved for the first time a pandemic as a disaster, and that was COVID. Prior to that, pandemics, epidemics had never been a disaster. And that's important because it has to be a disaster event in order to get Small Business Administration relief, and it has to be a disaster event deemed so by the federal government. So anyway, over the last few weeks, that happened, and the Emergency Injury Disaster Loan Program is now open to businesses that have been impacted by COVID. This is open to small businesses with 500 or fewer employees, including nonprofits. It's at a favorable interest rate of 3.75% for businesses, 2.75% for nonprofits. You can go to www.sba.gov. You can apply for up to $2 million. They have payment deferrals for a year, so you don't have to pay your first payment for a year. Repayment terms are up to a maximum of 30 years. No personal guarantee is needed for up to $200,000. They may have changed that, so you'll have to look at the details. The good thing is for these loans, you don't have to put up any real estate as collateral. But that said, read the fine print. You have to know what you're getting into when you sign up for these loans, because they are loans. You can't guarantee that you're going to meet all the conditions for forgiveness. So you have to intend to pay these back. They'll ask you to represent that, and you have to be prepared for that. So I think right now a lot of people are thinking this is just free bailout money. They'll never have to pay it back, but that is just not the case. So make sure you know what the terms are. So with this economic disaster loan program, it takes some time to process. In recognition of that, the SBA also has kind of an emergency bridge loan of $10,000. What I'm understanding from everything that I've seen is that if you apply for the disaster relief loan, the up to $2 million loan, that within 3 days, you're supposed to automatically get $10,000. And this is just to hold you over until you get the disaster relief loan. Now, the interesting thing is you don't have to pay it back if you don't end up getting the disaster relief loan. So when you apply for the disaster relief loan, you'll be asked for your bank account information, and so that money should be automatically deposited. At least that's what the materials say. I'm a little, haven't heard anybody report back yet that, they found $10,000 in their bank account, but, that's what's supposed to happen, and I'm waiting for the first call that that's actually been the case. Okay, so those are the sort of key items with respect to those loans. There's some other financial relief right now that you'll want to investigate, including there's deferment of payroll taxes. You can defer payment of your portion of 2020 payroll taxes until 2021 and 2022. There is a payroll tax credit. It's called an employee retention payroll tax credit. You get a refundable tax credit of up to $5,000 per employee on the payroll when certain conditions are met. If you receive money from the Paycheck Protection Program loan, you're not eligible for this credit. So just be sure that you know, if you apply for one thing or receive one thing, that you're not disqualified for something else. The other good benefit right now is that the tax filing and payment deadline has been extended to July 15th, 2020. And then you can also get tax credits in the full amount of the qualified sick leave and family leave wages paid for between April 1st, 2020 and December 31st, 2020. And you can sort of get paid automatically for that by reducing your federal employment tax deposits. So obviously you've got to bring in your bookkeeper, accountant. This might be something you need help with. If you're really desperate and you need to borrow against your retirement account, you can do that without incurring the 10% early withdrawal penalty. It's best not to touch retirement, but if you need to do it in a pinch, that's the plus. There's some unemployment benefits out there for independent contractors and self-employed persons. I won't go into that. That's more for workers than I think for the businesses that we're focused on today. There is also something called the Economic Stabilization Fund. That's really for big businesses. So for instance, mid-sized nonprofits and businesses that have between 500 and 10,000 employees are expressly eligible for those loans. So again, I'm not going to focus on those loans because our audience consists of smaller businesses. And the other thing to remember is your commercial banks are there for you. They may have special programs. I think this is a great time to get to know your business banker, see how they can help you, and just really open up the lines of communications because they might find out something that might be helpful to you before you find it out. They might have special application processes or be able to move your application through a little faster. So I think this is we're in a period of building relationships, not just our personal relationships where we're all under the same roof for days on end, but also professional relationships. Because I think this is also a time while we're kind of, plugging the holes in the dam, we're also trying to think about the future at the same time. I know it's hard, but I think it's not too early to at least start putting things in place for that, for when we get to the other side. So question is, how do small businesses know where to go? Who can advise? I would say, check with your accountant, your financial advisor, visit the SBA website. The U.S. Chamber of Commerce also is a great resource. It's uschamber.com. They have something called the Emergency Loans Guide that gives you a really nice flow chart. It helps you figure out what you're eligible for, so go there. And you can also check your local Chamber of Commerce. Every locale has one. They're also a resource. And at the end of the day, just get in line, get your applications in. I think that's the most important thing right now. Okay, next part, I'm talking a while. So one of the topics I wanted to touch upon, and I'll just sort of quickly go through this, we'll leave time for questions and I want to get to Laura. But there are a lot of questions about cancellation and refund strategies in the wake of COVID. It's a really tough time now. People aren't traveling. Everybody's worried that they're going to have an onslaught of customers coming and wanting refunds. And those requests are happening. I always tell people, you'll get people who won't get off of wanting a refund, whether they're entitled to one or not. You just have to figure out if you have the wherewithal to give some refunds and just move on. So I would say for most of my clients and people I've talked to now, they're looking at maybe about an 90% rebooking rate. The key is cash flow right now, preserving cash flow. So every company out there is on the phone, on email, working with customers to get them rebooked to the future. Again, not everybody's rebooking, but a good percentage. And they're doing that by, just the goodwill they've built up with customers who are willing to wait. Those customers don't want to give up on the trip. Companies are doing creative things, such as giving an extra night or two. They're giving value above the face value of a trip. So, it could be 115%, 110%, 120%. Those are the ranges that I'm seeing. They're allowing people to book to another trip, booking to a more expensive trip, and then just collecting the difference. Holding a low season price, allowing somebody to take a low season trip that they booked and going high season, but not charging them extra for that. And the other thing that people are really liking is being able to transfer the trip to a family or friend. Some companies are doing it for 2 years, some companies are doing it for 1 year. So end of 2021, end of 2022. So I think this is a time to really be creative. Think about how you could just sweeten the pot where you don't have to come out any cash right now. And just, buying time on that is absolutely paramount. The other thing you should be doing is looking at your cancellation policies. You'll have pre-COVID policies. You need new policies for now. For people that you rebook to a later trip date, your old cancellation policies may not apply because you might rebook someone 3 months out, but we may still be in the midst of COVID. We don't know. So you've got to create some new terms and then figure out a push out strategy to your customers. Everybody you rebook should have new terms, and they should understand what happens down the road. And most of what we're seeing, and I think what's working best for companies, is to say, yes, if we rebook you now, we rebook you to September, we can rebook you again, or you can take a credit. But in no case are you getting a refund. They don't say that, but that's really the gist of it. There's some questions with respect to just the whole idea of force majeure and what does that mean, and do you have to give refunds? The short answer is a lawyer answer. It depends. Everyone's looking for a quick answer on whether force majeure and saying those 2 words just fixes everything and means that you don't have to give refunds. But that's just not the case. You have to look at your contracts, see what they say about force majeure, see if pandemics are included in force majeure, see if you have a catch-all phrase that could include a pandemic. And if you don't have a force majeure clause, you'd have to look at state law to see whether or not this event qualifies as force majeure. And there's some other intricacies there. So, at the end of the day, with respect to your suppliers, if you've already sent them the money and you don't have a contract with them, they don't have to give you the money back simply because there's a force majeure event. There are a number of factors that go into that equation for, do you have a contract with that supplier? If you don't have a contract with that supplier, it says nothing about that, then they don't have to give you the money back necessarily. And it won't be worthwhile to sue them. So you've got to really spend time working with your suppliers, working with your customers, and really being creative to find something that works for all of you all, where you don't have to give any money out to a customer or be on the hook yourself for that. There was a question with respect to, will coronavirus be included in force majeure clauses going forward? Yes, it will be if you write up a force majeure clause and include it, so which you should be doing. So that's going to be, I would say, phase 2. Companies were already lining up to work together to revise terms and conditions to deal with a situation when there's a run on refunds. Everybody wants a refund, and to protect companies from that. Okay, and with that, I will say, with respect to mitigating future risk, a few things to think about for the next phase is making sure that you have your insurance in order, participant insurance, that you're really pushing travelers to get travel insurance, and not just plain travel insurance, but cancel for no reason insurance. What we saw right before closures and restrictions on travel is that people started getting nervous about traveling and they wanted to cancel. and too many people wanted to cancel at one time, which caused a cash flow problem. And the problem for tour operators was that people were asking for money when they were well within their rights to get a full cancellation. No terms and conditions was really written for that scenario. So, I think pushing people to a cancel for no reason insurance will help with that. And then shoring up terms and conditions and cancellation policies to allow for no refunds in this particular situation. You should be looking at your participant contracts holistically from A to Z, looking at cancellation, refund, rescheduling terms, looking at your supplier contracts, putting those in place, including force majeure, what happens to the money if something like this happens again, renegotiate with your suppliers, drop the suppliers who were, unjustifiably not working with you at this time, and then fortify and get your cash reserves in order. And with that, I'll turn it over to Laura. Thank you.
Sorry, I muted myself. Well, hello, everyone. Thank you for being here and giving us your attention. I also have the list of questions that Chuni referenced, and I'm going to try to work in the answers to the ones that relate to me, to my presentation. But I wanted to start with just a note that anything that touches employment law or benefits has a COVID-19 application or issue underneath it. If there is a government agency that addresses something related to employment, they have something about COVID-19 on their website. And I don't know if you all saw me like dramatically looking down. I was trying to be cool about it, but I got a pop-up on my phone at 2:25, so 25 minutes into this presentation, that the Department of Labor has released a final or a temporary final rule relating to the implementation of some of this paid sick leave. So things are happening, as Chuni mentioned, fast. And fast is great when we're in need, but fast also raises a lot of questions. So I have not read what just came out from the Department of Labor. I don't think it changes anything I'm going to talk about, but I will caveat my presentation with that. So if you're looking at issues related to unions, employment discrimination, Disability Act accommodations, the WARN Act, wage issues, Family Medical Leave Act, any of that, OSHA, the safety issues, any of that is going to have an employment law component to it. The good news is that the government websites, as I mentioned, have been updating pretty timely. So there will be something on there for you to look at. The most helpful one from understanding some of the new employment specific rules is the Department of Labor's Wage and Hour Division, and that's just dol.gov. Okay, if you go there, they have a page of guidance that they're updating. It's in a Q&A format, and they just keep adding numbers. I think the first day it was 1 to 10, and we're up to 50 something now. Lots and lots of questions about the emergency paid sick leave and this extended Family and Medical Leave Act. The IRS website also has a lot of information. I think some of it was updated this morning even, about that tax credit that you can get for the emergency paid sick leave and the extended Family Medical Leave Act. So there's a Q&A format there as well. So definitely bookmark those websites, be looking at them. The one thing I did want to add to what Chuni was discussing around the Paycheck Protection Act is the concept of the impact on forgiveness if you let people go or reduce pay. There is a little bit of a safe harbor timeline. So any employment actions that happen between February 15th of 2020 and 30 days after the CARES Act was implemented, which was March 27th, right? Yeah, my people have no boundaries. My phone's ringing. Anything that happens in that window, if those people are put back to work or their wages are restored by the end of June, you're safe in there. Okay, so that's why, if there's something, if you've already let people go, or if you've put people on a temporary furlough, or you've reduced everybody's salaries down to the statutory minimum, anything that you've done in there, if it's happened between February 15th and essentially April 27th, you could still get the forgiveness if you reinstate it in time. Okay, so don't feel like that has the fact that you've taken that action removes your ability to go get in line, because I think as Chuni mentioned, the need to get in line quickly is it's a pressing need. So that was the piece that I wanted to add on the Paycheck Protection Act. The other thing to note, and I believe Chuni touched on this as well, is the idea that you can't double dip. You can't have both. Okay, so there's the concepts of wage tax credit and deferrals, and then there's the loan forgiveness aspect under the Paycheck Protection Act. You can't have both. So there are provisions in there that if you've given someone the paid family leave or the emergency paid sick leave under that act, and you're taking the tax credit there, you don't also get loan forgiveness for that piece. So that's, ultimately that shouldn't get in your way of making the decisions you need to make right now. But depending on the size of your workforce and the pay level of your workers, that may make a difference for you, whether you think the tax credit is more important or the loan forgiveness is most important. Most of the people I've talked to that are in the under 20, under 50 size are going with getting in line for those loans. Because they want to keep people working and they want to keep them getting paid. But just know that there are those offsets, and that's a question to be asking your tax advisors and your CPAs. So other aspects of the recent federal legislation that impact employers are, the first one is the act that was enacted before the CARES Act. Okay, so it feels like 6 months ago. It was just a couple weeks. And that is the Families First Coronavirus Relief Act, or Response Act, excuse me, the FFCRA. And that you can find addressed and discussed in great detail on the Department of Labor's website. That's the dol.gov. The ones that just released the rule that I haven't read yet. But essentially what that does is it provides paid sick leave of up to 100% of a person's wages for 2 weeks for them to address their own quarantine or symptoms, or their need to be home for themselves. Okay, you can also get for that 2 weeks pay of 2/3 the regular compensation to care for someone else who has either been quarantined or who is experiencing symptoms, or who is home. You need to be there to care for children who are home because of a closed school. Okay, it seems that every jurisdiction, every region is handling this differently with respect to school closures. Some areas of the country have just gone ahead and called it, and they're not having school. They've ended the school year for 1920. Some schools are have shifted to online. This is going to depend also on whether it is a private school or a public school. Where I live in Austin, our students are going to begin online learning in public school on April 6th, but they are closed through at least May 4th. Private schools, like I said, had different rules, and daycares and childcare providers are also impacted. So if a person needs to be taking leave because their regular childcare provider is unavailable, or their daycare is closed, this leave also applies to them. This is the 2/3 emergency paid sick leave. Okay. It also adds up to 10 additional weeks of Emergency Family and Medical Leave Act at 2/3 pay. But in that case, that extended family medical leave is only for the school closure or the daycare, childcare provider unavailability. Okay, so the original, you may see some conflicting information out there because the original version of this bill would have expanded that sick leave for any of the reasons, including caring for someone who's on quarantine or because you're quarantined or sick. But that was taken down to just address the childcare issue. So again, that additional 10 weeks is at 2/3 pay, and it's only for the childcare school closure issue. Some clients have said, oh, well, I'm not subject to FMLA because I'm not big enough. This is an exception to that. Normally, the Family and Medical Leave Act only kicks in if you have 50 or more employees for 20 consecutive weeks during the preceding calendar year. Okay, so you look back, you take April 1st, you look back 20 weeks, throughout that prior year. And if you had 50 or more people on your payroll for 20 weeks, then you're covered. In this case, that requirement goes away. Okay, so it applies to everyone whose employee count is under 500. So it's kind of the opposite of the regular FMLA, right? So employers who have 500 or more, it doesn't apply to at all. For employers who are under 500, it's essentially any employee that you have on your payroll as of the date of request. With respect to the 2/3 leave, it's anyone who's been there for 30 days or more. So very recent hires wouldn't be covered for that. There are some exceptions for compliance if if a company has under 50 employees and would experience a difficulty creating the ongoing concern of the business. So in other words, if the business's ability to function would be in jeopardy because of the need to provide or pay the leave, you don't have to do that. I'm not going to give a lot of specifics about that because I have a suspicion that this new final rule has some more specifics than what I have available. So I'll just say if you're thinking about claiming that exception, make sure you go read about it first and be certain that you can meet the criteria that have been released by the Department of Labor. What I saw last week was that that the ongoing concern of the business would be jeopardized and that someone has documented the reasons for that. There's not an application or approval process for that. You just got to be prepared to explain yourself. So that's covered employer. And again, for the 2 weeks of personal leave, any employee who is working at that time, and 30 days for everyone else. This particular type of paid leave does include a tax credit, an offset for whatever you pay under it. So if you're a business that has, a lot of payroll, the ability to keep your payroll going for the next 6 months, if you're not as dramatically impacted as most people are, you may choose the federal tax credit option rather than applying for the Payroll Protection Act loans. But most people are going to be going the Payroll Protection Act and then worrying about forgiveness later. Because if you're up and running and you're able to put people back to work, that fixes itself, and then you may or may not decide to take the tax credit. So that is what I have on the paid leave issue. I believe someone asked a question whether age can play a part in any of this, and I will say legally no. Okay. I wasn't really sure what the question was addressing, but it said, can age play a part in layoffs in this or any other crisis? And it's not supposed to. Under the Age, Discrimination, and Employment Act, which applies to employers with 15 or more employees, it is illegal to discriminate, discharge, treat differently in terms of conditions of employment individuals who are over the age of 40. For much smaller employers, people under 15, that may not be as much of an issue, but most states have a version of age discrimination that applies if the federal law doesn't. So I don't want my 15 or more employees to suggest that a person could be victimized if they're in a smaller employer, or that we don't have to worry about that. So no, the Age Discrimination and Employment Act and the state versions of that would protect people from adverse action in that instance. So unemployment is the next. I want to make sure we're paying attention to time. Unemployment is the biggest thing that happened in my world with the CARES Act. There is a number of things that it does. It adds an additional $600 on top of whatever a person can get in state unemployment. So for example, in my state, the maximum weekly benefit that a person can get is $521 a week. Some people get less because of their wage credits or for whatever reason, but that's the maximum I can get. This would add a $600 topper on top of that to help provide, in my state's case, double the maximum relief. That $600 is also available under a different provision of the CARES Act, which is called the Pandemic, I got to get the state right, the Pandemic Unemployment Assistance Act. Assistance for Pandemic Unemployment Assistance, PUA. There's so many new acronyms. The PUA. This is for people who aren't typically able to get unemployment, and that includes independent contractors, self-employed people. I think as Chuni mentioned, can get Payroll Protection Act and the other SBA loans. Also, people who are independent contractors and self-employed can be eligible for this additional relief. And for those people, it tries to put you in the same place that you would be if you were a regular employee in your state. So for example, if I was a 1099 contractor in Texas and I had enough wage credits as justified by my tax records to have qualified for the minimum level in my state, I would get that plus the $600. Okay, so it's intended to try to put people like that on an even playing field with workers who are employed traditionally. It includes gig workers, and the fact that you're a business owner doesn't change that. Again, you're not going to be able to double dip paid leave to yourself or to your employees and unemployment, but in some cases that might actually be better for people. One of the things I've been doing with clients is working through at what level is it just better for people for us to furlough them. Generally, workers who are on furlough are eligible for unemployment. They're not getting paid. Or is it better for us to just fire them? Like, how the numbers add up? And for some workers, usually people who are earning under 35 or so thousand a year gross, taking this temporary furlough, it may actually put them in a better financial position than keeping them on the 2/3 paid leave or not. So I think that's math that everybody has to do individually. It's something to sit down with your tax advisor and your CPA about to figure out what's the best choice for your business and the best choice for your workers. The way that you apply for this new either Relief for Workers Act assistance or the PUA, the Pandemic Unemployment Assistance under the CARES Act is the same way people would apply for unemployment. So even though it's federally provided, it's going to be done through your state unemployment insurance agency, whatever that is. If you don't know what that is, they generally have names like the Department of Labor and Industries or the Workers Commission or just the State Department of Labor. Google searches will help you find those, but it's whoever you would apply for unemployment with in your state. This $600 boost, something else that's important to know when you're talking about furloughs versus layoffs, is that ends at the end of July. So July 31st, that $600 boost sunsets. Okay, the rest of it, the pandemic assistance for gig workers and independent contractors, that's actually retroactive back to January, and that sunsets on December 31st of 2020. So those people have a little bit more window. Not the $600 bump, but the other coverage. Okay. Some states also will still require work searches to be able to qualify for unemployment. My state has waived that. That's important to check in your own state whether you have to fulfill those obligations. Texas says no because there's no work out there, so people aren't really gonna be. It's just a waste of time in administration. And you can't be getting paid leave at the same time you're getting unemployment. That would disqualify a person from being eligible for that additional amount. So that is important to check in your state whether they have waived the work requirements, and also many of them are waiving the 1 week waiting requirement. So a lot of times you have to wait for a week before you can be eligible. Most states are waiving that as well. So that's kind of the unemployment overview. I've heard people call it unemployment on steroids or unemployment ×2, but there is enhanced help out there in the unemployment world. So I think that's everything I have to talk about. And so I think, Shuni, I answered the questions that were presented to me in my presentation. So I'm going to turn it back to you to answer the ones presented to you.
Yeah, I think just going through the questions, I think I answered most that are here. I think there is, I touched upon this, but one of the questions again was, I think people are a little nervous about cancellations beyond May. As we get closer to May, they're wondering, what next? So the question is, what can we do about cancellations beyond May that have to be rescheduled because of the coronavirus for one reason or another? Example, a traveler or his or her family member has had COVID-19, are not ready to travel, or people cancel because of the uncertainties for the remainder of the year. And I would just go back to the strategies that I articulated a little earlier, which is try to find a way to reschedule, give them credits, allow them to transfer the trip to a family member. You know, the person who may have had COVID may not want to travel for a long while. So whatever you can do to keep money in your pocket and get them a credit, get them to reschedule, that's, I think, where travel companies should spend a lot of time figuring out creative solutions. Any other questions? I think we can open it up for questions from the audience.
All right, yeah, I think you can hear me now. I was on mute trying to talk.
Oh, okay.
Thank you both for all the knowledge you have shared with us. At this time, we will take questions from anyone who has them, so feel free to unmute yourself or utilize the chat. We would request that you don't ask specific questions, not knowing the background. Junie and Laura won't be able to answer, detailed specific questions about your business, but general questions regarding laws and policy that have been in place. So again, feel free to unmute yourself at this time.
Sarah, I see Sandra has a question, has a raised hand up there.
Okay, let's see if I can find Sandra here.
While she's looking for that, I wanted to mention something that I didn't, and that is a question that people often have about what happens to employee benefit, employee health insurance when you're on unpaid furlough. Okay, and so furlough is you haven't been fired yet, but you've been told not to come to work for a while because we don't have work for you. Most of the benefits providers that I've talked to are making an exception. If the furlough is short, it's not impacted. If it's a couple weeks, because you've already paid that month. Most of the benefits providers are allowing people to remain covered as long as those premiums are paid. In other words, they're not considering it an event that would trigger COBRA obligations, which has much higher premiums and a deadline date. So I think that's a question if benefits are an issue when you're trying to make decisions about what's best for my people. Talk to your benefits provider before you pull that trigger if keeping benefits alive at an affordable level is important to that decision making. So, all right, I'll be quiet now.
And Sandra, you are off mute if you'd like to go ahead with your question. All right. Let me see, it looks like Jeff, do you have a question as well? Jeff, you're off mute if you have a question. All right, I'm going to move on. Jordy, you are off mute if you'd like to ask your question.
Yeah, so if we have an employee that has half salary or was keeping her on, and she's using the Obamacare, would she be able to get help in reducing the premium that she's paying for her health insurance because of her salary is going down?
And so that sounds like a benefits eligibility question. And generally, the assistance available to her because her salary is going down depends on the level of her salary and the impact of that on availability of her benefits. So the person to ask that is the benefits provider, whoever is covering her, whether a salary reduction impacts anything about her eligibility or what would be available to her as far as assistance. But I don't know that that's a question you can really answer without looking at the specifics of both the plan and the amount of money you're talking about.
Okay. Okay,
Yeah.
that'd be great.
But
Yeah, because
the benefits provider is where to go.
okay, we should call them then. And the other question is, as a business owner, should I or should I not? I get mixed answers about applying for unemployment, but I'm the owner of the company, so I'm not quite sure if that would be something that I need to do or I shouldn't do because of the other help that I might be applying to.
I can address the unemployment eligibility part. Shuni, do you want to go ahead and give the overview of the other things that he can apply for?
Yeah, I mean, there's the small business administration. Have you applied for any of these? Well, you don't have to say. But the Economic Disaster Relief Fund, the Payroll Protection Program, that's something that could help you, just weather the storm and be able to continue to pay
So
payroll.
apply to those two. I applied to those two. Well, I think the second one for the payroll is gonna be happening on Friday. I think they're opening up here I'm in New York.
Yeah.
So my accountant was saying that I should be ready by Friday. Was going through all the papers, but that's why somebody else said, "Oh, apply for unemployment." But I'm like, doesn't seem right. But I don't know if it's right or wrong because at these times everything is changing every 5 minutes. So
Yeah, and I can address the eligibility. So if you're the owner of the business, but you're an employee, okay, so you pay yourself a salary and you have to fire yourself because there's not work to do, okay, or you have to reduce your salary below a certain level, you can apply for partial unemployment or you can apply for unemployment through the normal system, okay? Just because you're the top dog at the shop doesn't mean that you're not eligible if you're also an employee. What's been added with these new provision under the CARES Act is that pandemic assistance, pandemic unemployment assistance, is the ability for sole proprietors and self-employed individuals to apply for unemployment if you are in fact not receiving income as a result of COVID-19. So there is a list in the CARES Act of the definition of covered individuals. So you wouldn't be, there's kind of two different things. You can be an eligible employee who got fired, or furloughed, or a reduced salary, or you can be, if you're not an employee, you could be a covered individual. And in that circumstance, there's a list. I have it printed, so I'm just going to read from it. There's people who are not at full employment due to COVID-19, either because you've been diagnosed or experiencing symptoms, somebody in your household has, so you're providing care, either for a diagnosed family member or a child care provider, you can't get to work, et cetera, et cetera. But probably the one that may be the most important to you is that your place of employment is closed as a direct result of the public health emergency. So that can impact your ability to work because you're closed. You're not working, so you could potentially apply for unemployment. If you're still receiving income, though, that might not be the right fit. So I think it's the question is really going to be where is the most relief you can get, because you can't really double dip on both of those. So just the fact that you're the owner doesn't make you ineligible for employment. Just where you apply those funds is going to depend on what your circumstance is.
thank you.
Thanks, Jordy. Gary, it looks like you are unmuted. Go ahead with your question.
Okay. Hi there. Thank you very much, by the way. And I am the sole proprietor of an LLC, but I'm also the sole W-2 employee. Does the Paycheck Program make sense for me, or do I go the unemployment route? I mean, I sort of, the question was sort of asked by Jordy, the gentleman before me, but I'm not clear if it makes sense which is a better route for me to go. And also on top of that, New York State does not require, because I am the only employee and the sole proprietor of the LLC, that I didn't have to kick in for unemployment insurance. So that whatever that couple of dollars per paycheck fee would have been, I have not paid that in because no one foresaw the possibility that you'd have to fire yourself, or lay yourself off. So I'm not sure if I have hurt my eligibility as well.
So if we were talking traditionally, that would be true. Because if you're not paying payroll taxes, then you're not going to be eligible to apply for unemployment. But the new CARES Act addresses people just like you. Okay, so the CARES Act does allow for persons who are not traditional employees to qualify through the federal funds. So you still wouldn't be eligible for the way that your state makes those decisions. You would still go through your state agency to do the application, and which would be then available under the federal funding. So they would be able to provide you what you would otherwise get if you had been eligible for unemployment. So, and then as far as the question of which one works better for you, I think a lot of that is going to depend on what your cash flow is, how you see your future work.
Oh, yeah.
You know, all those different factors that are important to talk with your tax advisor and your CPA. And I don't know, Judy, if you wanted to add anything about that.
Yeah, I think that.
Yeah.
I would just
Sorry, go
add
ahead.
that. Oh, sorry. Sorry, I didn't mean to be talking over you.
No. I mean, I just been keeping a record of every tour that I'm a tour guide and the proprietor of the tour company. And every tour that I was contracted for has canceled from early March through, I'm into June already with cancellations. And we're talking thousands of known entities that are now gone for me. And I was paying myself, I would get 1099s from these companies and then pay myself from that. So I'm owed money, and I'm going to be getting it Friday from a very valued entity. They owe me just under $800, but still, is that going to affect me applying? Things like that. I mean, I still technically have money coming in, even though those tours, and it also includes cancellation fees too, that they garnered from me and a few other guides too that work for them as independent contractors. It's just for them. For these companies in New York, it's better if we are independent contractors so they don't have to go the workman's comp route. They don't have to carry that insurance. So I just worry that all this is going to, at this time, nothing looks suspicious maybe, but normally it would, right? I mean, that's what I'm concerned about.
Yeah, I don't know that we can get into, some of those nuances and questions. But I would say that as far as which is better, things I would be looking at myself, if I were in your shoes, is, where am I going to get the most relief? Unemployment would just be what you're paying yourself, right? But under the Paycheck Protection Program, as long as you use the money towards payroll, your business, I don't know if you have rent or utilities that are business expenses, but you could use the money under the payroll protection program, get that money for those expenses. Whereas unemployment would be capped at just, what you made.
Right.
Well,
I'm the only expense. That's it. I am the overhead, me, and what I pay to the federal, the Social Security, Medicare, their share of it, as well as what I took out from my paycheck to give to them, and federal and state and local taxes. So that's it. I am the overhead. So I'm not. I mean, maybe the Paycheck Program just sounded so appealing, and I don't know. Might go that because I'm not sure I can even get through the New York State unemployment people because I was trying for 2 hours this morning. But I did all the paperwork already. They want you to call. I got an email saying call us 2 days, from now, once I filed the paperwork online.
I don't think it hurts to apply for the payroll, submit your application while you investigate this more.
Okay.
I think it's
all
for
right.
you. It's going to come down to math. It's going to come down to just what's the math. Like what can you get from payroll protection and paying yourself your average wage, right? Versus what would be available to you in unemployment, which in your case would be whatever your state's benefit level would be if you'd been an employee plus $600 a week. So it may just be that you have to just run that math and decide which one. But I think Chuni's right about everybody getting in line early. It's not going to hurt.
Okay. All right. Thank you very much, guys. Thank you for your time.
Thank you. And we have time for one more question. Umang, you have been taken off mute if you'd like to answer your question or ask your question.
Sure. Thank you. So my question basically is regarding the unemployment, the $600, just to confirm, one, that is on a weekly basis, correct? And then secondly, just to confirm that $600 is a flat amount, regardless of what the wages of an individual might be, if they vary, like if someone's making 75,000 or somebody's making 25,000, it's 600 regardless, correct?
That is right. It's a flat amount and it's weekly.
Okay, perfect. Thank you. Sorry, I have one more question if I'm still unmuted.
You are. Go ahead.
Okay. For payroll protection, you mentioned rehiring by June 30th. So for that rehire by June 30th, can it be a new hire or does it need to be someone you've let go already and kind of replacing or just kind of bringing them back?
For my understanding is the way that the forgiveness works is it doesn't necessarily have to be the same person. It's more headcount based.
Okay.
I don't know if Chuni, you've read anything different about that. The way that I read it, it talks about reduction in employees, which sounds like headcount to me. There are job protection things under the Enhanced Family Medical Leave Act that I didn't get to. That addresses bringing the same person back to the same job. But I believe under the payroll protection forgiveness, it's just a straight headcount question.
Okay. All right, great. Thank you.
Thank you all for joining us for today's webinar, and thank you, Laura and Chuni, for being here. We appreciate all of the wonderful guidance you were able to provide and taking time out of your day to do this. IITA will be continuing to have webinars to try and answer your questions and help get through COVID-19 as best as we all can. We do have a webinar next Tuesday, to be looking for the registration for that coming up soon. That'll be with Peter Greenberg. So thank you all for joining us today. Thank you.